Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, the New York Post, with my partner in crime, the granddaddy of data, the one and only Bob Sloan, the founding partner of S3 Data, S3 Partners, right?
S3 Partners.
Why do I fuck that up every time? I don't know.
S3 Data?
Yeah.
It sounds good, though.
It sounds good, right?
That's all
right. But we should point out that S3 is the number one independent data provider on the Bloomberg network. So
and also gaining traction on FactSet, I might say.
And now gaining traction on FactSet, which is, by the way, if you don't know, it's a pretty good site for this sort of stuff, for financial data. I use it, and I think that's probably how I first came across S3, through FactSet, as a matter of fact. But in any event, Bob is the granddaddy of data because he's got his fingers on the pulse of the most, I guess, actionable market positioning data you can want. And this is why big hedge funds, sophisticated investors flock to S3's data. And it's why we distill it here, not just for sophisticated folks, but for the average trader and people that are looking to invest. So that's part of our job here at S3, at Risk and Return. It's part of what S3 does great. It's also part of our I guess milieu, to say, so to speak.
Well, you are a journalist.
Yes, I should
went to the best journalism school in the world, Missouri.
That's what I think, anyway. But anyway, the people at Columbia Northwestern would have qualms with that. But because we give you just more than just data and numbers crunching, we do give you some headlines, and
yes,
I'm gonna give a few. Now, we should point out we had the axe of media analysts on last week. His name was Rich Greenfield from Lightshed Partners.
It's great.
Made some very fascinating comments about the Paramount's, legal imbroglio to take over Warner Bros. Discovery, which is running into resistance from 12 state AGs. I should point out that just now, within the last hour, the European Union has approved it.
Right.
Okay, with some conditions, but there are minor conditions. And that's what makes this lawsuit all the more bizarre, because it seems like it's political. And here's why. As we know, the controlling family of Paramount Skydance are the Ellisons,
yes.
David and Larry. Larry Ellison's a good friend of Trump. A lot of people think that the Ellisons want to move the CBS, which is what they control now. They will control, if this thing goes through, CNN to the center. Make it no longer bastions of left-wing agitprop, as conservatives would say. So this is kind of catnip for progressive attorney generals, AGs, as these guys are, including its leader, Rob Bonta, the California Attorney General. And I guess you could say as playing like a secondary role here, but pretty much at the top of the list is Tish James, the Attorney General of New York, who's no fan of Donald Trump, and we don't need to go into all the lawsuits she's filed against him. So it's very political in nature. The antitrust angle, in my view, is pretty weak. Listen, they are combining a bunch of stuff. They're combining streaming. They're combining a bunch of cable channels. They are combining two studios. But let me ask you a question. Like, who cares? These are companies that are being disintermediated by other market forces that need to merge, or else they're going to go out of business probably in the next 5 years.
If the EU approves it, the EU is no fan of consolidation. They're no fan of, I would say technology generally, right? They're huge fans of privacy. They're huge fans of regulation. So if they approve it, that puts the state of California to the left of the EU. Think about that for a second.
It's a good point. I'm going to make that point in my column about this and cite some dude named Sloan.
It speaks for itself.
Right. Rich made the point that the TRO, the temporary restraining order, which they issued the judge in this case, and I forgot the name. It's one of those three names. It's like hyphenated thing. And anyway, it's a Biden appointee that was involved in civil rights in the past, so you can know where she's coming from. She's very left wing. That she put the TRO on. The real problematic is not that it gets delayed for the rest of the month, right? Is if she does issue a preliminary injunction, which would delay this until trial.
Yeah.
And that's where it gets kind of funky, because as you know, there's a ticking fee
$7 million a day. I
right.
think I
So
heard that right last
something
week.
like $600 million a quarter.
Yeah.
If, depending on how long this goes without a resolution, the Ellisons would have to pay the shareholders of Warner Brothers. That was part of the deal to win this, wrest control of the company. Remember, Netflix had it first,
right?
And they came in and did a hostile bid and convinced the shareholders it should go to them. So that's problematic. You can't integrate the properties. That's problematic. There's a lot of negative publicity that will go along with this. Warner Brothers Discovery shares will probably take another dive because they're at $25 a share now. Remember, the deal was $31, so they're trading significantly below the offer price. But a preliminary injunction, I think, would set it down probably further. If you're playing this as an ARB, you might want to consider. I'm not saying it's definitely going to fall. For all I know, the $25 reflects
the bottom,
the preliminary. But
it's already in there.
It's just, but I don't know. I mean, it could take another hit, leg down. So you have that, and then you have the notion that there's this trial will be done by this judge, this Biden appointee will be adjudicated by the judge, who's a lefty who probably will stop.
So let's play it out.
Let's just say they lose.
They lose. So they appeal.
Supreme Court. They'll win there.
And they'll win. So basically, this is a tax.
Yeah, but how long?
$7 million a day. It's $2 billion.
Yeah, but I know. But how long? They can spend $2 billion.
Yeah, they can spend $2 billion.
No, but I'm just saying, how long before this thing gets done?
Well, that's more your neck of the woods than mine.
Rich said well into 2027.
Right. So it's 2 years. So it's $4 billion. I mean, at that point, I don't know how Larry and David Ellison think, but
they tell me they're going all the way.
But okay, so there you go.
Yeah, they have no choice. Remember, they have a very smallish media company. For them to really do what they want to do, which is create a media company for the future, they need to consolidate all these channels, create economies of scale. They need to make money. They need to pay down debt.
Yeah.
What makes no sense from the AGs is that they really think that these two companies, if they were separate, would somehow be stronger market players that would be able to compete for talent and pay up for stuff than if they were together. And
this is Spirit Airlines all over again.
I mean, it's stupid. I mean, these are companies. By the way, do you know Warner Brothers stock was anywhere between $8 and $12 before this thing began? It was hovering over there. Now it was starting to rise a little because David Zaslav did a good job cutting debt. He took it off it was like $6 a share, that stock. He also had some good hit movies last year. Remember, they had Sinners and that thing with DiCaprio, that dystopian anti-ice movie. I can't remember what it was called. But anyway, you know what I'm talking about. It won the Academy Award. But in any event, so he had some help there. But still, this thing really didn't. The stock wasn't moving until the bidding war came.
Yeah.
So remember that. Paramount Skydance, again, a company with, a decent studio, but a mediocre streaming service and mediocre cable and, CBS, which is, aside from sports, is not doing so great. I know 60 Minutes touts great ratings, but it's usually around when football comes before it, right? In any event, I just don't understand. I don't understand the logic
of the top 100 rated streaming / TV shows. Aren't 96 of them football?
Yeah,
it's something like
sports. That. What makes money in this business? It's still in linear cable, meaning not, but also on over the top and on
Amazon.
Sports,
yeah,
business.
Yeah.
So you and I could have a job for a while.
Well, I mean, we bring heat, content, analysis,
and just
data,
and wonderful personalities and good looks too.
Good raconteurism. You tell a great story.
And gray hair. And gray hair.
We bring maturity.
Maturity. That's what it's known as.
Sobriety.
Well, speak for yourself in terms of sobriety. Actually, I don't drink before 6. You know that.
I know. No, you're very healthy guy.
And I stay right at a couple, and I stop. Then I fall asleep. Okay, so we got Paramount out of the way. Paramount or Mont? Mount. Interesting enough, I've been following weekly the muni bond pricing of New York City munis. You have too. Interesting. Why do people care about New York City municipal bonds? Because there's a lot of rich people in New York City still. Mondami hasn't chased them all out. Mayor Zoran Mondami, the alleged commie, our socialist boy mayor.
Yeah.
Well, 33, was he 33, 36 years old? I can't remember.
He's younger than that.
He might
Isn't
be
he
younger.
like 33,
Yeah,
32.
his job experience includes a stint in the New York State Assembly and a career as a rapper, I think.
Amongst many
And not a
things.
rapper like he rapped
and
things.
he's a quote unquote organizer.
Yeah, he would. But a rapper means not rapping gifts,
No,
but
I got that.
rap music.
Rap music.
Not exactly a great one either. So, but I've been tracking, and after muni bonds started to take a dive, meaning the yield started popping.
Yep.
First couple months, they stabilized after he balanced the budget, which was interesting. So they stabilized, and then now I'm noticing 2 straight weeks in a row some pretty significant pops in yields, like a 10 basis point pop in the geo yield last week. So that to me said something. There's and it was funny is Mondami was out there and gave a long, crazy interview to the New York Times. Did you see that thing? Where he said he wanted to arrest Netanyahu, and he said this, and he couldn't define.
What was interesting to me is that made the aperture of that definition very, 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 very wide.
Am I more working class now?
Maybe by his definition.
I was when I was a kid.
Like if you made less than $2 million, it was a really good sum of money. So in other words, it covered like 98% of the people.
So why is he raising my taxes?
Good question.
But in any event,
I don't know it was $2 million, but it was a very. It wasn't.
It was $1 million.
It was $1 million.
Yeah.
Okay. So.
Listen, it's not. Listen, if you have,
it wasn't $40,000,
right? If you have a couple kids, you send them to private school here in the city.
Yeah.
You live in Manhattan. $1 million doesn't go. You're not swimming in it. You're not like you're not like Richie Rich here.
That's right.
I mean, you're living comfortably, but not. You got to watch.
That's right.
Okay. In any event, he also said in that interview that that the fears of capital flight have been way overblown, that we're not seeing it now. Let's be real clear. What did Hemingway say about bankruptcy? Happens gradually,
and then all of a sudden.
Okay, and that's kind of like capital flight. If you follow the history of capital flight, particularly in New York City, it happens gradually, and then stuff happens where people start leaving, and that was and then you have a fiscal crisis, and that was kind of the experience of the 1970s. You had you had for years, middle class people working class people getting sick of the crime and the shitty schools in the late 60s. And all of a sudden, the shit really hit the fan in the 70s with real feckless leadership. John Lindsay was the mayor. They weren't picking up garbage in Queens, and people bolted to Long Island and Westchester County. My family was part of that diaspora. And then you had the fiscal crisis when you lost that much of your middle class, working class tax base. It's a little different because New York City is, changing demographically all the time, where much of the tax base now, this is the home of rich people.
Yeah.
But you're starting to see gradually those people leave.
How many hedge funds have opened up
in
Miami? And I know the number. I just want to.
I don't know. I just know that everyone.
I think in the last 5 years,
everyone I know is looking. I know that.
So 300 hedge funds moved out of New York City and now are domiciled in Miami, Palm Beach, Fort Lauderdale, etc. So that's just one data point that shows you that capital is on the move.
Yes. And that's the capital that pays a lot of the bills here.
Yeah.
And so that is now being reflected, I think, gradually in the muni bond prices. You're starting to see, listen, New York City muni bond prices should be going higher. And here's why. Because if the mayor wasn't nuts, right, and he's raising some taxes, you buy them because they offer triple tax-free protection, right?
Correct.
Your gains are protected from state, local, U.S. taxes if you're domiciled here.
Right.
So people should be buying this stuff.
Right.
As all things being equal,
right.
If he's raising some taxes, but if you're a socialist and you think, okay, the other side of the equation, and plus New York City muni bonds do have some protections. I think they get first dibs on certain taxes, right? Passed during the financial crisis. That's how you got people to buy them again.
That's exactly right.
So you put those two together, you should have people buying these things, not selling. But I think people just so worried that Mondami's so nuts that he's so communistic. Is that a word? Communistic?
Yes.
Socialistic? That I don't think that's a word, but we might as well coin it here and on risk and return. But that they're starting to bail. I see it every week. Now, maybe it'll change the next week, but there was a pop in yields, 12 basis points from the week
he's
before.
on the same operating model that all of the, I'll say, anti-financial politicians, and there are a lot of them, both on both sides of the aisle. Okay, they actually operate the same way. Meaning, so what brought down Bear Stearns and Lehman? They had short-term funding, and they went longer-term illiquid assets. The funding disappeared. They were insolvent. The S&L banks in the late 80s and early 90s, same thing. SVB Bank, same thing. You have a lot of these things that happen where there's long-term capital management. They're funding their longer-term assets with short-term funding, right? And the spread collapses and they go out of business. So the politicians do the same thing.
Yeah.
Right?
Now, there's some of that starting to happen in New York. The controller raised that point that there was a cash problem.
It's a cash problem, right? So what I mean by that is, what's short-term funding for a politician? Likes, TikTok views, X views.
Who knows with this guy?
Video popularity, votes. The economic consequences are the longer-term asset. So anything to get attention, anything. And they know that raising taxes is a thing. And then the longer duration consequence is, well, what happens if capital moves? What happens if institutions don't get built? What happens if
there goes your short-term finance?
And then there you go. So you've got, their operating model is the same.
And this has been, but
even though they're in different lines of work.
Yeah, no, you're right. And it's always, it's that, and that operating model is, business. That's the way businesses operate. Let's face it. You need some access. You do need short-term funding. It's just the way it is. You don't get all your money all at once. But to have a solvent business is that you have confidence in the company. The other thing,
to have a solvent business means you have to get your hands on money,
right?
If you're not self-funding,
right, and you need confidence.
Most financial assets are not self-funding,
and you need confidence. Right. Why did Bear Stearns go out of business? Really, it was a lack of confidence in the future of the company, in its solvency.
They couldn't justify the marks on their books.
So you lose confidence. Now, the confidence that we're seeing here is the tax base.
Yes.
And, already, even before Mondami got into office, the Citizens Budget Commission, put out this thing about the last the 3 years or 4 years preceding that, millionaires leaving the city. Again, millionaires is not that rich here, leaving the city left and right. And these are the people that buy our muni bonds. By the way, if you can't sell your muni debt, or if you have to pay more, that's kind of, that leads to insolvency too. That's one of the problems the U.S. government has. If we ever run into a problem where we can't buy our debt, the dollar collapses, the country collapses.
Right.
Okay, so remember that. That's one of the reasons why you don't want to run trillions of dollars of deficits every year. What do we have now? A 1.5 trillion, I think.
Well, it's 37. I think it's 35 trillion, 36
trillion. Total debt,
cumulative.
Right? Yeah, but I think it's a $1.5 trillion deficit. I could be wrong.
Or maybe more.
It might be 2 trillion by now. It's really crazy. But anyway, that's where we are now. I'm going to keep looking.
Well, one thing. I just want to add one thing. So we've been looking at the longer term ETFs, the bond ETFs, TLT, et cetera. There's no short positions in those bonds. So one of the things that we always like to highlight to folks is when short positions disappear, generally there's an air pocket to the downside. So we said this about energy a little while ago. We said, wow, this is kind of like a one-way bet.
Right.
And there were just, no one wanted to short it because it was quote unquote too risky. And all of a sudden oil was down to $70. So when you see there's no buyback support from the short settlement, that disappears, and that's disappeared in the bond ETFs.
Oh, interesting.
And you've seen, the 30 years around 5%, click through 5%. Now, I know that 30 years is not the benchmark anymore, but still, I would say that's a warning sign.
For our debt right now.
Well, I think it's a warning sign that we're probably underestimating interest rate moves.
It's a funny thing you say that, because we did have this conversation on when I was on Fox the other day on the Big Money Show, where Dagan McDowell pointed out the 10-year, it's the 10-year spiking, and I pointed out that we have a divergence between the bond market and the stock market in terms of what the hell's going on. And
no one cares about the price of oil in the stock market anymore. No one cares about the Strait of Hormuz anymore. They just care about AI.
And they've
gotten used to it.
And they care about spending because the bonds are spiking. Bond yields are spiking. Prices are falling. So there's something going on where there's a signal about maybe a prolonged war is costly.
Well, Kevin Warsh is also signaling that he is going to give the market less of a heads up than we've been used to.
So then there's a jitter there, you think?
Right.
So, okay, that's interesting. That's a good way of putting it. Maybe it's not totally fundamentally based. It's just based on better be safe than sorry on rates and guidance, forward guidance.
And forward guidance.
Okay. One story I want to get into before we turn to your stuff, which is a very controversial story, a story about the IRS chief, a guy named Frank Bisignano. Do you know Frank?
I don't.
Okay. So I've known Frank for years. Just full disclosure, I like Frank. But that, I would tear his head off if I thought he deserved it. There was a story in the Wall Street Journal that said when he worked for JP Morgan Chase, and now he was one of Jamie Dimon's top guys, co-chief operating officer. He had like every operational job he did. He's an operational expert. Now he's been out of JP Morgan for years. He was at, I think he ran something for KKR, and he ran an insurance company. He's very close with Henry Corrales. He's close with this guy's been around, and he was and he and John Diamond have always been pretty close. But it was a story about how when he was at the, and as you know now, he's the IRS chief and has Social Security, so he has all this access to sensitive information, right? Customer, taxpayer information. When he was at JP Morgan, he spied on his colleagues. That was one of the allegations. And there was another allegation that he misused corporate funds. Now, if you read the story, despite the headline, he denied literally everything, and they put all his denials in there. But I kept looking for something like a denial from JP Morgan. Like, did this happen? I mean, one of the people he allegedly spied on was Charlie Scharf, who was the head of consumer banking. And now he's the head of
Wells Fargo.
So I said, is any of this true? And so what I got from a senior JP Morgan executive in the position to know is that they looked into it. There was an allegation apparently, and
nothing happened.
They didn't think he was spying on people. Corporate jet use, no, not a problem. Or any misuse of funds.
Right. But why now? Why that? Why is this?
That's a great question. One thing I will point out, and maybe this is where it gets a little funky, right? So if you're the head of operations, right, security comes under your purview. Now, Wall Street is one of the most highly regulated businesses on the planet, right? 100%. They track everything you do when you're at work. Every business tracks what you do. By the way, one of the easiest ways to get fired is to download porn when you're at work. No, seriously, it does. People get fired. Now, how does your boss know you're downloading porn in your office? Well, not because if no one could see you, it's because they track it.
Yes.
Right now, so word to the wise: if you want to download porn, go home. Right, but everything you do at work gets tracked. Some more than others. I'm a journalist, so I mean, not that I don't download porn in the office, but I mean, I do look at crazy shit because I have to look at it. I go on the web. I mean, I'm always looking stuff up. So if they want to see what I'm looking at, it's like it's the gamut. You know what I'm saying? Stuff involving. By the way, if you look at my history, it's a lot of stuff about working out and food.
Yes.
Okay. Just so you know. Just so you know. I don't want to bore you too much. And a lot of stuff about finance, like what is the bond yield on X, Y, and Z. So,
but this is
what I'm saying.
When I read that story, I was kind of like,
what
is that?
But just take that times 20.
Yeah.
If you're head of security at JP Morgan, they're and you're a trader, you're tracking everything. They're putting keystrokes. He allegedly had some deal to buy a keystroke firm, right? I'm just saying.
That's Standard operating procedure.
keystrokes. Yeah, the people check
Standard
that.
operating procedure.
And so the whole thing is, why are we reading about this now?
Yeah.
Because he's doing stuff for Trump, and he's gonna streamline and modernize the IRS and Social Security, and he's good at that. And and by the way, and on top of that, he pissed some people off at J.P. Morgan.
Right.
He was a sharp-elbowed guy.
Yeah.
Frank's from Brooklyn. Trust me.
Right.
He's a
I
tough
gotcha.
guy, and I kind of like that about him.
Right.
I mean, he used to tell me if a story sucked. He was like, "What's wrong? What the fuck are you writing about?" He went like this to me once, like I was shooting heroin writing the story. I can imagine what he would say to his direct reports if they did something stupid. Right? He told me, he said, "Stop." He goes, "You're out of your fucking mind," But that's the type of guy he is, and I like that. I don't have a problem with that. It's a straight. At least you know where you stand with a guy like that. And he's, really smart. And by the way, he got into all this operations and fintech before anybody. Now it's the biggest part of Wall Street. He's also a self-made man, cancer survivor, 9/11 survivor, self-made billionaire. He doesn't need this job. Doesn't need this bullshit. But in any event, the Journal, listen, I work for the parent company. I'm not criticizing the story other than to tell you, J.P. Morgan says they looked into it and they said they found no evidence. Now, did he ruffle some feathers?
I'm surprised your phone's not ringing off the hook right now.
Well, my phone's charging in the other room. So maybe it is. But take that, we report, you decide. I'm not gonna piss on anybody here and just say I know Frank a long time. The corporate jet thing I found odd when they said it, and they denied it. His lawyer denied it, and the article kind of said that they didn't find any evidence, but they said they didn't. J.P. Morgan said there's no evidence of misusing that. I find that odd because around the time when he allegedly would have done it, it would have been. I just covered so many of these corporate jet fiascos. Another easy way to get your ass handed to you as a CEO, as a C-suite executive, is to use the corporate jet to go on vacation with your family, or to do something like he was going to do.
Right.
The Bizignano people said the Journal that he was going to use the corporate jet. One of the allegations, that's what they told me. I've not been able to confirm this, was that he was going to
use the corporate jet if you don't pay for it.
Yeah, but use it to see the Pope or something, or he was going to do something with it. And they said it's not true. And by the way, and this is what they told me. I didn't call the Journal and cross-check this, just FYI. But again, Frank's too careful to do that. My view. Not the type of guy. I mean, because he knows people. I'm telling you, I've written stories about people that have gotten their proverbial tit in a ringer over this stupid thing. Yeah. And it's not. It is just so. I mean, top men on Wall Street you don't do it. Right. Remember Jeff Immelt had two corporate jets and
one
people
flying, following the other.
Yeah, I mean, it was just. I mean, there was security that told him to do that. By the way, it wasn't totally bullshit, but he got in fucking trouble. I mean, it became a talking point. People were, so it's very
a talking point if you're underperforming, and you're
or if they want to get you on something.
Yeah, they want to.
So there was a good reporter.
Proverbial they.
So there was a good reporter at the Journal back in the day. I remember he wrote the Herd on the Street column. This is when there was a big thing. It used to move the markets faster, and that was a market moving thing that came out in the morning. If you can believe it, we're so beyond that right now. Everything's so instantaneous. But this Journal reporter, I remember, took. And he predated me for a few years, but he was really good, and it kind of screwed him up at the place. He wrote about Trump's early 1990s casino foibles and how he was screwed up with junk bonds going sideways on him, and put all his properties into near bankruptcy, and that Trump was nearly insolvent, and apparently Trump took him while he was doing these stories. Him and his father gave him tickets to a Tyson fight at one of his hotels in Atlantic City, and actually flew him there in his corporate helicopter. And he took it. And then when he wrote all these stories about Trump came out and said, this guy wrote all this stuff about me after I took him and his father to the Tyson fight. Even on my my corporate helicopter. And by the way, he couldn't cover it anymore. It became a very big black eye. And so this is like well known. And that's why I didn't believe that. If Frank did that, he would have to be stupid, and he ain't stupid. But anyway, that's where we are with the headlines, Bob. We should also point out that the EU did approve the preliminary. And did we say this already? I think I did.
We did.
Oh, okay. So
We
just making sure.
I don't know. All those things are just so political. Like when you see these headlines and people shooting each other for stuff and these infractions that are almost unprovable. It's just people love sending messages and through the billboards, and they when you're driving through town, you look up and you go, oh, there's a message, So you're right to report it because it's a very senior official and having a big spat with the most powerful bank out there. That's a news story.
It is a news story.
Let's get to this week's picks.
All right, let's go.
So we have a bullish call on Roper Technologies. It's a vertical software holding company. It has 30 plus very niche B2B SaaS businesses, which have been, out of favor. But, the price have been down 23% year to date. The market cap is about $35 billion. So it's actually quite big. And they're reporting Thursday, tomorrow morning. And we have a bullish call there. That's what the signals say. We have a bearish call on NASDAQ.
That's interesting.
Yeah, which is, and I saw this, I was kind of scratching my head because you look at any Wall Street earnings over the last quarter, they've been blowout earnings.
Right.
But, the price is actually down 6% year to date to $92, which is not, you wouldn't expect that. Short interest is roughly flat, down 1% to 9.4 million shares. There's just a bearish setup into tomorrow morning's earnings call. So we have a bearish pick on NASDAQ. We'll see how that pans out. One of the things that we've been focused on is Microsoft. So, Microsoft is now down 19%. I think you got this.
Whoa, why is that?
Well, a lot of people think it's their exposure to OpenAI. So when the markets thought that the hyperscalers were having this kind of DeepSeek moment with Kimi, which is the Anthropic Chinese Anthropic look like, and then all of a sudden it couldn't handle the demand because they didn't have their NVIDIA chips, and so now all of a sudden their business model was like, okay, we're only going to handle like high volume customers and charge them, and everybody else gets locked out, so that they don't have capacity. So what happened is that all of a sudden the chip stocks rallied because, hey, well, maybe there really is this kind of demand for this product, and boy, but the frontier technologies like Anthropic and OpenAI actually have a problem, right? Because it's all of a sudden there's a low cost competitor that's only constrained by capacity. And the one with the most exposure to those frontier technologies is Microsoft. So Microsoft's down 19% for the year, and Copilot really hasn't worked in their relationship with OpenAI. OpenAI had this problem where things left its container and hacked another company, and it's a big problem. So, but you look at the hyperscaler peers, the same CapEx bet. You have 4 different outcomes. You have Alphabet, which I think was flat just after earnings was announced. And then, that's been up 11%. Amazon up 7%. Meta down 2%. Microsoft down 19%. So, one of the things that's interesting is that the suppliers, right? So you have NVIDIA, then you have the hyperscalers, Microsoft, Amazon, Google, Meta, and then you have the NeoCloud, which is the business model we talk about a lot in the show, which is CoreWeave. Rent chips,
absolutely,
right? Rent out the capacity. CoreWeave is up 2% for the year. Nebius is up 112%, and then IREN's down 11%. So you're seeing the AI. Microsoft is like the odd one out. and people are very bearish. Like, okay, maybe they have too much exposure to software. Their OpenAI relationship is not good. Their Copilot product, no one's using it. They're the loser. What's interesting in the hedge fund positioning, if you look at the short positions, you can see the year-to-date change in long positions. Just go back. Thank you. You can see here where how hedge funds have changed their long positions. So they're getting out of Microsoft, getting more exposure to Amazon and Google, getting out of Meta. And that's the long position. So not only is Microsoft short interest at like a 10-year high, but you can see that the active investors are actually getting out too.
Oh, interesting.
So it's both sides of the ledger. There's long selling and there's short selling. So we thought we'd highlight that. And you can see the NeoCloud folks also, where there's pretty active shedding of positions on the long side, particularly in the IREN and Nebius. So Nebius, obviously profit taking, the stock's up 112%, but people are starting to say, okay, let's cut back on our exposure. Let's go. Now we can go to short interest. So the short interest is showing, year to date, wow, look at Microsoft. It's up 68%, 10-year high, and in the NeoCloud. So people are still very bearish on the NeoCloud. CoreWeave, Nebius, IREN, all these things are up 50, 60% in short interest. And, what's fascinating about the NeoCloud, a lot of that short interest is due to hedging for convertible bonds. So, but as the stock prices have, moved down, you're seeing actually some of that covering happen. And what's left is more directional. So, that we tend to look at that and say, okay, that makes sense. You have a lot of short interest in those names because they're raising money through convertible debt. And oftentimes they short against the convertible bond to hedge up exposure, and they like to play the volatility. But these numbers suggest that there's more than just the hedging and playing volatility. Right. There's actually an outright directional bearish sentiment on those stocks. All right. So next slide. So when you look at globally, if you look at memory stocks,
interesting. Yeah.
You see, memory stocks have been, pretty big sell-off, and and you can look at their 1 year price change.
Why is that? I mean, what is the move here? Fundamentally,
it's a good question.
I mean, market high. I mean, you just
market high,
take some profits.
You just think that there's.
You would think there would be wicked demand for chips and stuff.
Well,
right?
This is what's interesting is why we're highlighting is because the Chinese just proved actually that the world needs capacity.
Right. Absolutely.
And so these returns are saying there's too many chips.
Okay.
And maybe not. So when you have the Z-scores that are pretty deep negative, right? There's a couple of things here, 1.5 to 2. Like Western Digital, Windbound Electronics, and et cetera. A lot of the shorts in the United States have covered, but the conviction in high has held in Taiwan. So it really means that in this sector, a lot of what just happened is the world needs capacity, and shorts are reacting to that.
Okay.
We can go to one last thing we'll talk about this month or this week. Is some of the positioning-led returns. We talked about the crowded short book in Hong Kong, and we talked about how the South Korean stock market was, people just the rate of increase of long positions was really quite remarkable, outrunning the short positions, and you see the spread here, right, between the Kospi and Hang Seng has narrowed. And that's what we've been saying all along, is that all of a sudden you're seeing short positions being covered in Hong Kong. You're seeing long positions in Korea. Slowing down or becoming less, and that spread is narrowing. So that's an interesting data point, because these two markets have been just on fire, right? South Korea's just been on fire. Hong Kong, not so much.
Sickly on fire.
Yeah,
like scarily on fire.
Right? So that's what we got for this week. We love this because this is like South Korea. You have Samsung and Hunex are the two stocks that make up 50% of the Kospi, and the Hang Seng has been kind of flat, right? Because China has had these deflationary pressures in its economy, and now we're saying, well, maybe it's time to fade the capex spending of the hyperscalers, or maybe it's time to actually consider Chinese growth. And that's what that says.
Really? Chinese growth. That's what that says. It's a contrarian play right now.
It's a contrarian
because everybody's saying how Chinese economy shot.
Totally.
There's a lot of secular changes, secular.
But the spread between these two markets is telling you a lot.
I can't let us close the show without remarking about SpaceX, because I know you like talking about this. $115.
Broke the IPO price.
I mean, it's way below the IPO. The IPO price was 130.
Yep.
It shot as high as, I think, 180, right?
Almost 200.
Almost 200.
Yep.
I have 180. Maybe it was that. This is a intraday high of
Right.
200, right?
Yep.
52-week high, $225. So that was the intraday. Now we're talking about 115. I mean, what?
But that's, I hate to say it,
expected.
Yeah.
Well, you expected it.
Yeah. So
when do you buy this thing?
Oh,
I know you don't want to get there, but that's what everybody's asking. By the way, the minute we start saying that, that's when we get our tit in a ringer.
Well, that's right. We're not
booyah.
Yeah.
Is that what you're saying?
That's right.
There's no booyah around here.
No booyah. No. It's not a game show. This is real data.
You don't hear any cymbals in the background and weird noises, right? When Bob talks. Boom, bang, bang, bang. What show is that? I don't even know what show that is. I just remember watching.
Absolutely no idea what you're talking about.
I just remember watching that show somewhere. I might have been working for the same network at one point. But in any event, it is a question that most people are asking. And I think, one thing I will say, and just, as a general rule, is you never want to try to catch the bottom. And here's why. Because if you catch the bottom, if you're just waiting for it to bottom out, you usually miss the bottom.
Yeah.
Most people miss the bottom. And then, or you can look at it this way, let it start rising and then jump in, because at that point, who cares if you miss the bottom, right? You basically, you're still going to make money. If it's on the ups, if the momentum is going higher, it doesn't matter if you miss the bottom, you're still going to make money. So those are two ways of looking at it. I subscribed to the former rather than the latter. Miss the bottom and start buying as it starts to turn around. Momentum turns on this thing.
Yeah.
That's generally, for me, that's always been the, in my view, that's always been the logical way of doing it. I'm not saying that's what you should do here, but that's, to me, that makes sense, because this is going to be a momentum play more than just an earnings play. I think, don't you think? It's going to be like, do you believe in Elon? Is he going to do it? And where's the sentiment going on it?
I used to work for a guy. He told me, he said, "Kid, the man who tries to pick the bottom wakes up with smelly fingers."
Jesus Christ. Well, there you go. Well, there's an aphorism if you're ever going to.
That's what he said.
It's kind of true. Yes. So one way not to pick the bottom is to let the thing reverse itself.
It's so hard to pick these things because there's no trading history. There's
Right.
no there's what kind of technicals.
Yeah,
could there be?
and this thing is just
It's just IPO'd for like a month.
and it's not just it's a crazy business model.
You know,
There's
here's the thing.
AI, there's spaceships, there's Mars exploration, there's Twitter, X, I should say. It's all in there.
But you know, I will say one thing, which is the guy sticks to his cooking, meaning
Yeah,
you use X extensively. So
I do.
So do we.
Yeah.
You know, there's not a lot of advertising on X.
Yeah, I wonder why.
Well,
It's too crazy.
I don't know if that's an advertiser boycott. I don't think so, because he's proven that it's still
There was some
an
boycotting
unbelievable
when
platform,
he got it.
right?
There was some boycotting.
Right, but it's an unbelievable platform. The temptation has to be there to
Monetize it
to
in some way.
monetize, but he doesn't
Yet he hasn't
Well-
turned his attention to it. Maybe.
maybe, but if you're looking for revenue, you go everywhere, right? So I'm not going to tell you I know the first thing about putting rockets to Mars. Don't. So that's why I'm not going to say anything about what I think about the stock price, because I'm not.
Yes.
It's just not my gig.
And you know, he's a guy that has been doubted in the past and came through. We should point out that Tesla, by his own admission, was on the verge of bankruptcy. Remember, all the shorts were circling, Jim Chanos, and you know they made real good points fundamentally about the company, and he somehow pulled it out of his ass. You know?
Well, one thing that we have been around and talked a lot on the news is the short interest in SpaceX, which is about 32% of the float, about 211 million shares. That's our best daily estimate of where short interest is. And you know, Tesla's down about 2.5%. They reported higher costs and lower profit. So Google, Alphabet, Google's flat on. They actually beat their estimates, but I think people are waiting on CapEx spend. So you look, 32% of the float is high of what was a $2 trillion stock.
right.
That's a lot. So I think there is a bottom in there somewhere, because those guys are going to have to cover at some point. The question is when will they? And right now it's making money, making a lot of money. So shorts don't cover when they're making money.
You know, I just wanted to check myself. When I said I prescribed to the former rather than the latter, I might have gotten it mixed up. I knew what you meant.
I
because I just Googled, did I get that right? Latter comes after formal. So I prescribe to the latter, which is that you never try to catch the bottom.
Right.
It makes no
I knew
sense.
what you meant.
Okay. But I just wanted to.
I wasn't. You were in flow state. I wasn't going to let you.
Yeah,
I was going to let you.
That's when I fuck up the most, in flow state. But anyway, latter comes after former. You got to get that straight in my head. And the latter in this case was don't try to catch the bottom. You'll always lose because you'll get smelly fingers.
Something like that.
I feel uncomfortable saying that. But in any event, on that note, I want to thank Bob for your time today.
Thank you, Charlie.
It was always been a pleasure.
Always good to talk to you.
We'll pick up next week, same bat time, same bat channel. This is Charlie Gasparino signing off for Bob Sloan and our Risk and Return podcast. See you next week.